Hey, hi, welcome back, guys. I'm your host, the Tired Financial Advisor. Okay, so today we're going to be reviewing, our SPACs. Okay, so why am I doing this? Okay, it's because, I really feel that, sometimes these kind of Reddits are a trap. They are a trap, and sometimes they do provide good information. But however, I've seen way too many people, jumping into these kind of threads, and just getting FOMO because they see this kind of stuff and a lot of pumping that's been there. So I feel like a lot of people needs to do their own due diligence, and see through all the bullshit from the not really bullshit. Yeah, and basically that's my plan. Okay, let's jump straight into it. Okay, let's see. Okay, I thought I'd make this for any newbies, for people who are unfamiliar with SPACs, so they don't have to learn it the hard way. Yeah, the hard way. Okay, 50% loss, 60% loss. Okay, this kind of things. Okay, be careful out there, guys. Okay, just look at this. Okay, letter of intent. Okay, one look from this, I know what SPAC is. This is SHLL or HYLN. Okay, which is the merger with HYLN itself. Okay, so this is pretty extreme, I would say. Okay, it trades from all the way to the correct. Okay, the start is a $10 price floor where the price can't drop below this value. It shoots up. Okay, this is when they get the letter of intent, which is when they find that someone is going to merge. They find a target and they actually has a letter of intent and says, oh, I want to merge with HYLN. Okay, then that's where it shoots up because they have found a target. Okay, so when it shoots up all the way here, right, to this point, then it starts to deflate because these SPACs take time to merge, and they have a lot of proceeds they need to do. So these are just a letter of intent to say that hey, I want to merge with this company, but we still are figuring out the compensation, the things that we want to, the money that we need to hold in trust, a lot of financial stuff, and whether this merger will actually go through or not. It's just a target that they acquired. So then by then that a lot of people who've seen this kind of massive pops, right? Okay, so you can see that $10 pops up to $20. That's like, or $20, that's like 100% increase. That's most of the time you pop like 50%. It's a lot. It's a lot. Okay, that's a lot. Okay, if you know that the average S&P per year is like 8%, so that's 50%. That's like 5, 6, 7 years in one shot in like a few months. So a lot of people would take profits. Okay, so they'll take profits, and it kind of stagnate. Okay, you'll still be higher than the start of the baseline of $10 price floor because that's the money that's held in trust. Then it will actually drop all the way down to these lows over here. Then until they start having some dates, there's some initial run up after the letter of intent, then there's a further increase as the DA is announced and merger dates gets closer. Yes, so they start announcing the merger is coming in Q4, Q3, Q1. There's not a specific date, but they give like a general guideline of like a day that would merge, and then they start to run up, until they actually gives us a specific date. You'll pop even more, and you'll go all the way to the highs. Okay, and this period over here, right, is actually the run up of the last few days or last few weeks before the actual merger itself. Because I feel like last time the merger will really pop all the way to the merger day itself before collapsing. But I feel like these days, this graph is a little bit wrong because I feel more and more people know how these SPACs play, and a lot of people wants to take profits before the actual day itself. So I would say a week before the merger, right, people already start taking profits and they'll actually start to drop. Okay, and after the merger, okay, most of these SPACs, I won't say all, but most of these SPACs, the way they play is they will actually decrease because a lot of people start taking profits. Okay, you can see a uncertain period where majority of the profits are taken and the risk increases. Generally, stock price dips initially. Alright, so the amount and the way that the drop will be, right, how steep it is, will really depend on the company itself and the amount of PR that they do, or just general, the market sentiment. As you know, short-term volatility is driven by investor sentiment because selling breeds more selling, buying breeds more buying, because it's just a natural reflex. Because people who are in it for the short term, once they see, they're not in it for the company, they're in it for the price. So once the price gets weak, they sell. The company, doesn't matter what the company does. So because they're in it for the short term, so selling beats more selling, and it just goes all the way to the low. So I would say be very careful for general, the pricing of the price action, after the merger itself. Okay, most people, take profits early, at least take your initial investment out, and let your profits just run. Okay, so interesting. Okay, so Reddit do have some interesting things to say. Okay, yeah, don't be so judgmental. Like hey, these things are trash. Oh my god, it's like trash. Everything there is just a troll, our Wall Street bets, whatever. Yeah, I'm sure there's some bullshit out there. There's some good stuff out there too. So I would say this graph, right, Nice, nice. Okay, thanks, John 13. Okay, interesting. Okay, so this is a very nice graph that you should actually look at. Okay, now let's look at the other stuff. Okay, okay. DMYT and Genius Sports Index for sports betting with strong tailwinds. Specs nowadays run out with $15, $20, $25 on merger announcement. Shitty, obscure specs with pro fundamentals and obscure business models are all rich in the past few weeks. Investment presentation link before the DD. What's this? Genius Sports Group. Oh, okay. You can see this is a very, very, how do I put it? Standard investor presentation. Okay, they have this kind of like experienced founder-led team. All of them are super good. You know, they have a lot of experience. Yada yada yada. Okay, and leading leader in data sports provider, mission critical data for sports books, a unique position with skill and technologies. Okay, so you can smell the bullshit. Okay, you have to be very, very level-headed in kind of things. Okay, you cannot have confirmation bias. Okay, let me see what's confirmation bias. Okay, confirmation bias. Okay, confirmation bias is the tendency to search and interpret and favor and recall information in a way that supports your prior beliefs or values. And that means that if you are really bullish on something, right, then you will search for things that support your thesis. Okay, so we do not want to be that kind of person. Okay, you want to be think things on a very logical level and a very, very emotional kind of level, so that we do not fall prey to this kind of bullshit. Okay, so we look at this kind of presentation, right? Okay, most of the time, when you look at investor presentation, most of the time the due diligence, this is only like 10% or 20%, because it's definitely very biased towards the company. The company only say good stuff about their company, right? They won't be like, oh my god, my company is shit. No, right? Okay, so you must take everything that they say here with a small pinch of salt. Okay, and most of the time, these companies, they're trying to write off this SPAC hype that is currently on this entire market itself. Everybody is making so much money from SPACs. Like Thomas Healy was the graph just now, right? Thomas Healy was the CEO of HYLN, right? So HYLN, he became the youngest billionaire SPAC, of a SPAC. Because of the SPAC itself, he was the youngest billionaire that's made because of a SPAC. Okay, so you can see that many companies are trying to take the same way. Okay, it's this Genius Sports Betting, right? Okay, doing the same thing as well. So I'm pretty sure they're following DKNG. DKNG. Okay, DraftKings. Okay, DraftKings, right? They also, I think, a merger as well. Okay, so did okay. Okay, then wait. Okay, don't fact check me on this. Okay, maybe they're not a SPAC. Okay, but I know that they are a sports betting company which got super bullish or super hyped. Okay, so you can see it rolled up. Okay, from the lows of July, almost 100%, insane runs. Okay, I think they are a SPAC as well actually. Oh, it's DK. So you see, I'm doing my due diligence, right? DKNG SPAC. Yeah, they are a SPAC. They are a SPAC. DKNG is a SPAC. Okay, so yeah, they are a SPAC. They're one of the earlier SPACs. So you can see that, once they're very early on, they're trading at, they're trading at $10. Oh, but this is a long time SPAC, man. Oh my god. Okay, so you can see that once they get letter of intent, pop up here. Okay, but you can see that this deflates not as much, because I think the hype for this is really high. Okay, 30%. Okay, 30% is pretty high drop. Okay, you can see that although it doesn't look like much, it's a lot. So towards the merger itself, explode up to another 100% pop. That's why they say SPACs are easy money. Okay, but please, okay, from my experience last time, right? Okay, it's so easy to get lured into this kind of situation where if you get so much FOMO, okay, and you just can't control emotions, you just throw money in. Okay, then you throw money in here, then you just 50% down. Okay, please, it just takes one, right, huge loss to wipe out all the other small gains that you have. Okay, so please be level-headed. Don't lose stupid money out because of this. So yeah, you look at this, right? It goes up all the way here to 89%, 95%. Then it pops down. Whew, huge drop over here. Okay, so you can see there's a lot of hype in DKNG. From the lows of its $10, it popped up to at least 5x in what? 3 months? 4 months? Okay, half a year. That's still a lot. Okay, that's still insane. Okay, so you can look at this, right? Okay, so I can see this Genius Sports Betting kind of guy, right? It's he's trying to write off this very, very hype. And another SPAC that's coming out is LCA, right? LCA stock, which is merging with Golden Nugget Gaming. Okay, you can see that, oh my god, it's also pretty high as well. Okay, from its lows here, right? Okay, I was actually a little beating myself over this because I actually really wanted to invest in this stock. But however, after the SPAC bubble burst, right? For me, it's always about how much money I could keep not about how much I could earn. So at the point in time, after the SPAC bubble burst, right, I would think that, you know, the investable sentiment will be very, very, how do I put it, dim, or very, very fearful of putting money back to this kind of SPACs again. So I myself felt that, you know, I will wait for, you know, a little bit more of a rebound and more of a sentiment hype before I actually put money back into those SPACs, you know, to do some quick swings or to actually put a small position in this speculative place. But however, you know, wow, when these SPACs move, right, I've seen nothing like this before in my years of investing. Is it goes up so fast, okay? It's 30% in just a week. It just pops up and up and up. And you know, once it starts popping, why didn't I put my money here? Okay, say, oh, you know, once you told me that it starts popping, right? Okay, then why didn't you put money around like this area? Okay, basically because I as a person, I don't like to chase parabolic highs because of my favorite catchphrase, risk to reward ratio. Okay, so the when you chase such a high, right? Okay, we look at the go to Yahoo Finance. We come look at the charts itself a little bit. Okay, now we look at the charts here. Okay, you can see, right? Okay, this kind of parabolic moves, right? Insane parabolic moves. Okay, when it pops up, right, $15, right? Okay, it just moves up so fast, so fast. Okay, up. Okay, this kind of high parabolic moves upwards, right? Especially you can see this point, $14. Okay, around $14, it starts popping one day after the next. $16, $18, $20. Okay. I don't normally chase these kind of highs because it's very scary. Okay, it's very scary because once it pops up, right, the next level it can fall to is the next level of resistance, which is like $16. So a $17, $16 range is like 10% plus percent. Okay, so it's very hard to, you know, catch up to these parabolic highs. And, you know, I know I won't be able to sleep soundly at night. You know, I won't be able to sleep soundly at night because I know that there's a chance that I might bottom it at the highs and it may just start to deflate as fast. And, you know, you can set your trailing stop loss, you can set your stop loss, but, you know, some of these stop losses doesn't really work in after hours or pre-market trading. So you can set a stop loss, but in pre-hours it could be down like 30%. Then like when the market opens, your stop loss won't even go through, okay, or you have to sell it at minus 30%. So it's really, really scary for me. So, and as a personal investing thesis, right, I do not really chase this kind of super parabolic highs unless I'm willing to take the risk. So it ended up running up so high, it's insane. Okay, running up to $25. Okay, you can see this kind of pop, right, is parabolic, it's crazy. Okay, so it goes back to this stock itself here, right? Okay, so it's trying to, you know, ride on this trend of this like sports betting kind of like a trend and try to get some, you know, funding from this. So you can see a lot of funding has been done here. Okay, ad tech. Okay, interesting. Okay, I'm looking at the FIFA Premier League. Okay, yeah, interesting. Okay, so we want to see through all this bullshit. Okay, all this bullshit here. Okay, founding team, investment highlights. Okay, so I'm just showing you, you know, how I do my DD. You know, how I'm looking through everything. Data acquisition, data monetization. Okay, honestly, okay, I might even cut out some of these because some of my DD because a lot of these would be just, you know, me in my head, and I'm just thinking through a lot of things, and I'll just be scrolling. So I'm pretty sure you don't really want to watch all these. So, you know, I'll just skip to the more interesting parts. Official data. Okay, so it says official data, and why does it matter? Okay, it matters in sports data. Okay, use of official data is inevitable in the direction of a maturing market. Successful execution of official data strategy proves concept. Acquisition of official rights, monetization of official rights. Okay, so what I'm seeing, okay, is like a technology, it's like a data collection technology group. Okay, it's powering the sports data ecosystem. Okay, our business, we collect live sports data, we provide data and mission critical technology to sportsbook which cannot run without it. Okay, so it's a lot of data. So it's like a data company for very specifically to sports betting. Okay, but I'm just some of the questions that are popping up in my mind right now, right? It's like, so okay, I'm trying to be critical here. Okay, I'm not trying to, you know, like you know, trying to bash this company or anything, but I'm just trying to be critical here because when you see one side of the story, like, it's very bullish, right? Okay, you have to ask yourself about the stuff that's, you know, what are the facts that might be the opposite way, so you have a very balanced kind of view. So I'm being very critical here. I'm just thinking that, you know, what does this company have? You know, that other data companies can't do. You know, other data collection companies can't do. Okay. Yeah. You know, 100% data integrity. Yeah. Pretty sure a lot of data companies have their integrity pretty good. Low churn partnerships. Okay. Highest quality data. These kind of words are very like, I would say, iffy, you know, it's like doesn't really say much. Okay, it's high quality. Okay, so what does it prevent, you know, for like other tech companies? I won't say, don't fact check me on this, you know, but like, I think like, you know, Palantir, those kind of data companies as well. But what wouldn't they, you know, like what's preventing them from entering this market as well? So do they have a competitive advantage? Okay, I'm just looking at it as a point of an investor. Okay, so yeah, so I'm looking at it, data monetization, data acquisition. Okay, but I would say they're trying to niche into the sports betting space. So I would say if they have the first movers advantage, then that'll be pretty good as well. Look at this: Genius Sports, Sports Radar, IMG Radar, covered. So you can see that they are the leaders in, you know, this Genius Sports group. Outsource wagering, so data, and that doesn't matter. Okay, why does it matter? Okay, let's just explain why does the data matters. Okay, so I think this is not super important. I'm going to go to the numbers now. Okay, so uniquely positioned in a fast-growing environment. Sports betting is increasing from 2020F to 2025F, 30% CAGR, 11% CAGR, 30% CAGR, 12% CAGR. So what does this mean is, okay, US is actually growing at a faster pace than the rest of the world. Okay, so see 31% CAGR compared to the rest of the world. So sports betting is very lucrative in the US markets itself. Oh yeah, okay, so well positioned to capture the US markets, multi-levels for growth, opportunity. Okay, and they'll just say about the same stuff, not really important. Okay, for me, when I look through these kind of things, I'll skim quickly through because I want to break down as many sources as possible so I can have many different insights. Because after all, you know, looking through everything here, if I spend 3 hours, 4 hours looking at this one sheet, right, how much DD can I actually do? So I'm skimming through, you know, I'm speed reading through a lot of things, then canning the most important parts so that, you know, you can get the best bang for your buck when you come to doing due diligence. Okay, and okay, you look at strong consistent growth for the past 5 years. Okay, I'm assuming all these are true. Okay, I'll have to fact check them on this, actually fact check them on this. So, you know, strong consistent growth in the past 5 years. Okay, interesting, pretty good. Okay, they are increasing profitability, growth, adjusted EBITDA, also. Okay, right now they are in the negative. Okay, so I see they're now fighting a little bit. So, okay, so they have some revenue here. In 2019, they actually dropped. So this, right, is a point where you need to go and research yourself. Okay, there's so much more to doing due diligence than, you know, just reading some articles and, you know, looking at the facts. You know, you really have to dive deep into what really happened as a long-term investor to see what actually is going on behind the scenes. So I'll actually see this, right? I'll look at this. Okay, 9 million, right? Why is it negative 9 million? Okay, you have to do your own DD later, so you have to go check this out. Okay, then you can see the 2020 forward, right? Okay, not bad. Okay, they have upped their revenue growth. So I would say they're fluctuating in and out of profitability. It's like okay, I'm profitable here, I'm not profitable there. Okay, but okay, kudos to them. You know, they're able to get this kind of profitability in the middle of the crisis. Okay, so they projected they will actually increase their profitability next time. Okay, but this part, okay, I would say is redundant because you never know. Okay, every single company will be like, oh, I'm projecting I'll have further huge growth in the future. I'll make like 50%, 100%. Okay, you never know. So all these numbers are just take it with a pinch of salt. Okay, so you see what has already been happening. So I look at 2018, 2019, and 2020, in and out of profitability. It's for me, you know, kind of. So business model leads to high operating leverage. Look at cost description, direct costs, right costs, gross staff costs, SGA. Okay, interesting. Okay, so it says, you know, growth unrelated to company growth. You expect tier 1 to continue. Okay, so in a sense, I can sum this all up, right? Okay, they are just basically saying that, you know, they are a company which are very data focused, and, you know, data companies most probably have a very high operating margin, which means that, you know, for every single product that they sell, okay, in this case is the data collection services, right? Okay, for every single company or the product that they sell, they earn a lot in the difference in the profit margins. So, which is very true, you know, for many data companies and cloud companies itself as well. So yeah, so they also plan to, you know, target multiple spots in need financing and revenues via investment models. Acquire tech companies. Okay, they want to acquire companies as well. Okay, there are some big dreams. Okay, but however, you know, when they are looking through, when a company wants to grow, right? They have an objective, right? Okay, I like companies that have a very clear objective that they want to go towards to. These kind of companies, they always say like, we want to do something like this. You want to acquire some companies, okay, emerging tech companies, not like here emerging tech companies. So I want something more solid, okay. And okay, let me just bring it out, okay, like if you're able to see. I don't think you can see. Okay, never mind. I'll just put it on screen right now during my editing itself. So you can see, right, Planet 13, right? Okay, they have very, very clear plans, of where they want to expand into, how many stores they want to expand into, which area they want to expand into. So they have very, very, very clear goals of where they want to go to, and this is what I want to see in the management team, in the investor presentation, where they want to convince people, that they know what they're doing, they want to plan for something, they want to go towards this direction. Okay, that's what I want to see for long-term investment wise, so that the company won't stagnate. Okay, for future 10x bagger, right, you need to really look at these kind of things. Okay, and okay, they're looking at genius long-term opportunity. Okay, these kind of things, probably they'll be like very high. Okay, transaction overview, multiples 10%. They have much higher revenue multiples than the rest of the online space. But all this data, you gotta fact check them. Okay, so you're not quite sure. So I gotta do more fact check. So later I'm just gonna put a small tick over here. Ding, on page 25. I'm gonna really do my DD later next time. Okay, maybe later in the night when I'm not as tired as now. Okay, so. Future company benchmark, okay, Zoom info, they're comparing themselves to Zoom and stuff, okay, so obviously there'll be a, how do I put it, like a lower valuation, because, all these other companies has already run up so much, okay, so I would say that, oh yeah, I can see over here, right, online gambling, right, okay, let's zoom in a little bit, online gambling, DraftKings, Lancadia Holdings, DMYT Technology Group, Points Bank Holdings. Their closing price is very, very high. Okay, so you can see that they're trying to value themselves in comparison to them. Okay, and their revenue is 7.4, Lancadia Holdings 9.2, DraftKings huge because it's already popped up massively. DMYT is another SPAC as well. If you want me to go and look at that, you can just comment down in the sections below. Oh yeah, drop a like please. Okay, so it helped me to churn out more content after my work and stuff. And it's pretty entertaining for me. I don't know why. Okay, it's pretty entertaining for me to look through all this kind of stuff. Okay, and I hope it is for you. Okay, you can just watch my videos. When you are eating your food, you're on the way to work. You can learn something along the way. And be entertained. Okay, so I really hope it's of value to you. Okay, so hit the subscribe button if you are not subscribed already. Okay, then we looked at okay, let's just bring it back to here again. Okay, so you can see that their revenue 2021 forward, right? I would say they are around the average. Okay, interesting. Okay, not bad. Okay, so all these kind of things, everything else, pretty good. But however, let me just wrap it all up by saying this one last point. Okay, so these companies, right? They doesn't really matter pre-merger. All these kind of fundamentals, right? I say as of right now. Okay, as of the situation right now with the SPAC craze, right? Fundamental analysis on these companies before the merger, I would say it's only a little bit of difference. Okay, of course there are SPACs which are trash. Okay, there are hot SPACs which are SPACs which are just bad. Okay, that you can see like Multiplan, right? Multiplan stock. Okay, this company, right, is a SPAC as well. Okay, there's so much potential in this company. Okay, I read through its fundamentals and everything. It's pretty solid. Okay, they have okay, only something fishy about these companies. They are trying to they are some sort of using this SPAC as a way to refinance their debt. Okay, but however, the business model and everything, insane value. Okay, I can see this being valued at $15. Okay, around $15 at least. But however, because this sector has no hype, this healthcare industry company, right, has no hype at all. So this sector has no hype. So this SPAC didn't pop at all. Okay, so when you do fundamental analysis on these kind of companies, right, you have to really look at the sector and just the general basis of whether this company will have the potential or will catch people's eye. Okay, so this company is a healthcare company, so nobody cares. So after the merger, it just got destroyed. Back to $7, $8.47. So it just got destroyed. Okay, so you can see that hype is so important, especially in this kind of specs. So the hot like sectors and specs right now are sports betting, EV definitely. Okay, maybe in my next video I'll actually show you one of the EVs I'm actually looking at. Okay, if you're interested, please comment down below. Okay, I'll actually we can have a conversation about this, and I might actually drag my tired ass to post another video for you. Okay, and yeah, so sports betting EVs are the major hype now. Okay, all those random like SPACs are merging with glass companies or like other very unknown sectors, right? I would say personally I would not invest in them because I know that pre-merger there will be no hype. The It will be out. Okay, so I would say that okay, fundamentals wise, okay for this company itself, okay. But however, I can see that since it's in the sports betting industry, right? Okay, people expect a similar run up to all those companies, sports betting companies like DKNG and LCA. And okay, so they're actually merging with DMYT. Okay, so DMYT, right? You can see it's already run up so much. So for these kind of specs, right, it's better to look at technical analysis. Okay, so we can see from this chart right here, okay, yeah. You can see from this chart right here, right, okay, insane runs up here, all the way down here, okay, looking up here, parabolic move, way above the 100 moving average, okay. This is where I'm a little bit scared because I don't know whether, these companies will actually, like, is at the top and it will actually all the way down because there's this bubble that anytime it will smack, die. So looking at these technical charts, right, it's already run up so much, okay, and I personally, I would put into something else that has not run up as much, or at least, wait for a nice consolidation. Okay, I'm just gonna doodle. Okay, let me doodle, okay. So I'll wait for it, to go up and down, 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 before considering, placing a buy order at the swing low over here, before it goes up. So when you have such a consolidation over here, right, okay, this probably have the downtrend over here, then, I can actually, place my stop loss here, okay, or 1 ATR below the lows, okay, or the deeper swing low, the next swing low, which is around, like maybe here. See this reference line over here, okay, then I have potential for an upside and lesser potential for the downside, okay, because I like these kind of consolidations. This kind of consolidations means that, there's a lot of power, pressure, building up in this area. There's a lot of buys and sellers and buys and sellers and buys and sellers, and a lot of people are actually putting their stop orders and sell orders here. People who are shorting this stock, they'll put their stop loss over here. And when this stock actually pops out this any resistance, right? What happens? Okay, they'll hit all this cluster of stop loss over here. This cluster of stop loss. Then what this happens is it makes a short squeeze. And you will squeeze all the way up to the next new level of highs. Boom. Okay, and this is where you can have much more gains. Okay, these kind of parabolic highs are very dangerous because it can reverse at any point in time because buyers can quickly turn to sellers and bam, all the way down here. Dangerous, scary, really scary. So this is one of my best tips I have for today. So I actually wanted to talk a little bit more about the spec, r slash Reddit on specs. Okay, so if you really want me to do more of these kind of videos, please comment down below. Okay, I personally think it was pretty fun to do it. Okay, and yeah, so I'll leave you with this kind of tip for specs itself. So thank you very much for watching this video. I hope you have a really great day. I shall see you in the next video. Stock and stay out.